Roberto, it's a very simple question. Why have oil stocks fallen so much lately when oil has actually held up reasonably well?
Yeah, I think there's two factors there, Brian. And I think the first one is to look why crude had a bid under it in the first place 2-3 months back. Obviously, there were a lot of geopolitical risk premiums being put in with what was going on in Strait of Hormuz and with Iran. So that artificially inflated crude, both Brent and WTI. And I think, secondly, you look at the markets being efficient there and forward-looking. And to the E&Ps, I think there was a big problem building that started a year and a half ago with the amount of DUCs that have been being built up, those drilled but uncompleted wells, which have gotten to above 8,000 and, kind of peaked out in February to 8,300. So there's a big real look at where these E&Ps are going to be in a year and a half. You're going to have crude prices dropping. You're going to have Permian pipelines coming on into the year end. At the same time, you have these E&Ps that are going to be brought back and reining in CapEx spending. And so that's going to really affect the entire oil and gas chain, from midstream companies down to pressure pumpers, down to oil service companies.
But it is not an exaggeration, I don't think, correct me if I'm wrong, Roberto, to say that the market and investors who have probably grown sick of 10 years of really no positive return on invested capital, they are trying to trade these as if half the industry is going to go out of business.
Correct, yeah. And there's certainly that kind of fear panic which set in yesterday. I would say, and I predicate that a lot of that is based on a buyer's kind of strike that went into the space maybe a month and a half back. So the kind of, I like to say, capitulation that we saw yesterday, that type of selling, throw in the towel, was more so a lot of short sellers pressing their bets there than more so than long sellers, kind of punting that there. So there was kind of that lack of buyer strike. Markets are looking forward. If you look at the WTI and even the Brent forward curve, they have crude sliding right up until fall of 21, where it gets to 50 or below. And there's really only a couple areas in the country where a lot of these guys really make money and break even at 50 or below. So the reality is we still have to have a couple of these small mid-cap E&Ps go away or consolidate. And it's going to be where do they consolidate from and what basins and what rock.
Yeah, well, listen, given some of the debt loads, they might indeed. But I can point, Roberto, to certain stocks where the valuations, price to sales, price to book, price to enterprise value, whatever it is, are below where they were when oil was under $20 a barrel. The selling has been indiscriminate. Right. Are you seeing any value? Has the selling been overdone? Are there opportunities in this wreckage, Roberto?
All right, good question. So there's 2 points there. Is the selling overdone? I would say yes. As of yesterday, we kind of hit that capitulation zone. So I look at energy names and I say, look at the sector. And we had yesterday over 25% of the sector make new 52-week lows. That's kind of washout. In addition to that, we had almost half the sector break below their lower trading bands. Last time we saw these kind of movements was May 31st of this year. We had a 10% move in energy. And, of course, December 24th, the panic selling of last year, when energy had a severe move of over 25% to the upside. The second point to that is that, looking forward down the line, are there values here? And the problem is that as these E&P companies draw down on their DUCs to make production guidance, they cut back their CapEx, otherwise they're going to be punished by the street. So at the same time, they're drawing down on their DUCs to make numbers. Crude prices will come down significantly in the next year and a half as these Permian pipes come online. So if you're an analyst at a money management firm and you're answering to your PM, how do you value these things? Where are these E&P companies going to be drilling in a year and a half with crude lower, their CapEx lower, and now they've drawn down their DUC inventory? It's a really hard time to value these companies and to model them out. So as a result, if you're kind of an analyst that's at a money management firm, you have a hard time justifying any valuation here. So if you're going to be wrong, you're going to have a hard time. It's going to be a hard conversation with your PM.